How's it going, everybody? My name's Antonio, and I am on the barbecue today with Jordan Trimble, the CEO of Skyharbour Uranium, which is a uranium project generator and explorer with assets in the Athabasca Basin. Who's not here with us today, though, is your financial advisor. This conversation is not going to include any recommendations to buy nor sell anything. It's going to be a casual talk between two people who you've likely never met. For as far as you, as a listener or viewer, are concerned, this is going to be a conversation that's general and impersonal in nature, as well as a conversation that will include no financial nor professional advice of any sorts. And also not a conversation that you want to use as independent research, because it's going to include a lot of forward-looking statements about uncertain events that may or may not happen in the future. Please take a minute to pause the video and read the full warning that is on your screen right now, because the mineral exploration, development, and mining industries are among the highest risk industries out there, and I want you to be aware of that. Also, do more research by visiting the company's website and analyzing its official filings on setter.com, as well as, of course, consult a professional investment advisor before taking your own decision in the end. And one last thing, Skyharbour is a paying advertiser of this channel, so I want you to be aware of that as well. That all said, I'm not doing a full overview of what this company does, specifically because I sat down with Jordan for a very in-depth interview about a month or so ago. So I'll leave that linked somewhere around on the video, below the video, all over the place. So if you're looking to get to know the company better, which from an interview, I would recommend that interview, because it was a good, long, in-depth interview. And it's also been about 2 months since Jordan and I sat down, so I'm due an update. I guess I'll shut up now and welcome Jordan here. Sir, thank you for investing your time with me.
Thanks for having me again. Looking forward to catching up.
Pleasure is all mine, of course. Again, as I said, been about 2 months. So let's start you off lightly, maybe as the barbecue's heating up. What have you done for shareholders lately?
Well, we've had a fairly busy summer. It's usually a quieter period for the markets, as you're well aware. And we did in the markets have some softer equity markets, although that looks like it's turning the corner and price is moving in the right direction again. So that's good. But as far as the company goes, we were very busy in the field. We continued our 10,000 meter ongoing drill program at Russell Lake. We have assays pending from that program, multi-phase, 3 phases. So we're just wrapping that up. And we'll have lots of news flow on that over the coming weeks and months. That's the project we talked extensively about on the last interview, so I won't get into too many details, but advanced stage exploration asset that we are acquiring from Rio Tinto just south of McArthur River, adjacent to our other co-flagship Moore Lake project. It comes with a camp, it comes with road and power, and highly prospective geological targets that have been drilled historically, but we're out there vectoring in on what we think is going to be the next big high-grade discovery in the Athabasca Basin. And this 10,000 meters is our first go at it. We are already planning another 4,000 to 5,000 meter program for later this year, early in the new year. So we'll have some news out on that, but that'll come once we get all the assays back and we report on the numbers. We've also been busy at Moore Lake. We're working on a resource estimate at our Moore Lake project. Again, we talked about this project extensively in the previous interview, and it's a property that we've had in the portfolio since 2017. We've drilled it quite a bit since then, and we've announced some very high-grade drill results, upwards of 21% U3O8 over 1.5 meters, 6% over 6 meters. So there's this high-grade multiple lenses at what's called the Maverick Zone and Maverick East zones. And so we are working on a resource estimate there. Those are our 2 main projects. And then coupled with the focused exploration at those projects that we're doing, we have our prospect generator business. And one of the more pertinent news releases in the last several months since you and I last spoke was we continue to add to our project portfolio in the Athabasca Basin. We added on a few claims to a few existing properties, bringing our total acreage up to over 1.2 million acres of property in northern Saskatchewan. So this is the 3rd largest mineral tenure holding in northern Saskatchewan in the Athabasca Basin, behind Cameco and one other company. So we've got all of the subregions covered in the Athabasca. As you know, we do act as a prospect generator with these non-core and secondary projects. We've announced 8 different option agreements, 6 of which are still in the earn-in phase, 2 of which have now earned in. So we've got 2 joint ventures, one with Orano, one with Azincourt, but 6 that are still in their earn-in phases. Collectively, these 8 option agreements total to over 85 million in combined project consideration. So that's in cash, stock, and in exploration funded by these partner companies. Now, that is assuming that these companies do complete their earn-ins, right? They are options. So if the companies elect not to complete the full earn-ins, we will not receive that total amount. But with the market moving the way it's moving and uranium prices moving higher, we are expecting a good chunk of that to come in and to come to fruition. And we are also working on several other new potential option agreements and partnerships that we are looking to forge here in the coming months at some of our other 100% owned projects. And then just one last note, we had warrants exercised, so we've topped up the treasury through that, brought in about 1.6 million hard dollars. This was actually from a financing that we did 3 years ago. It was the last hard dollar financing that we did, which was in August of 2020. Not many exploration companies can say that they haven't done a hard dollar financing or private placement in 3 years. And part of that is, again, the prospect generator business has brought in some cash and stock, and we haven't had to continuously raise money in the market. We do raise flow through from time to time to fund the drilling, but this has been one of the benefits of building out the prospect generator business is helping to keep dilution in check by having cash and stock come in from the partner companies. So it's been busy over the last few months, but what's even more exciting is the months coming up. Like I said, we've got lots of drill results to report. We've got resource estimate at Moore Lake that we're working on. We've got of the partner companies, we're expecting either major exploration programs and or drilling programs from 4 or 5 of them in the coming 6 months. We'll have news flow out from these partner companies, I expect, over the next several months outlining those programs. So we're going to have several programs ongoing across numerous projects throughout the Athabasca Basin.
There's lots to touch upon there, but just to the back of on the back of the drilling that you've done at Russell Lake, there's some of those results are taking longer to come in than expected, aren't they?
Well, we started the program earlier this year, and we announced this in the news release, right? It was a multi-phase program over 3 phases, and look, the assay labs, much like they were last year, aren't moving that quickly. And once we get a batch of results in, we will report on that, right? So we'll likely have a couple of news releases out on these results, but we're just wrapping up this program. This is a 10,000 meter program over several phases. It wasn't a one-off program that we did earlier in the year. So once we get the results in, we will report them, and that'll provide catalysts over the next several over the next several months likely. And also it'll lay the groundwork for this next program, as I mentioned, a 4,000 to 5,000 meter program. That should also get us the initial 51% earn-in complete with Rio at this project, well ahead of schedule as well. So looking forward to getting some news out there.
But the resource estimate that you just mentioned, that's something for, I'm assuming, late last year or something like that?
Later, yeah, likely later this year at Moore Lake. I mean, we've done there's been a lot of historical drilling there. We carried out a fair bit of drilling over the course of the last 5 years. And so we've had a kind of back of the napkin estimate, but we want to get a better sense of exactly what's there. And that's it. It's been the flagship project for the company, now co-flagship with Russell. It's a more advanced stage exploration asset that does host high grade mineralization. And keep in mind too, these are 2 very large projects. Collectively, they represent well over 100,000 hectares of prospective ground on the eastern flank of the Athabasca Basin, just south of the McArthur River project, just northeast of Key Lake, and adjacent to our western border at Russell is Wheeler River, Denison's flagship project. They're developing and building a mine there currently, an ISR operation, and they're our largest corporate and strategic shareholder. So yeah, these projects not only do they host high grade mineralization and in small resources at Moore Lake, but there's a lot of blue sky potential left at both of these properties.
To go back to the drilling that you're finishing up and you're going to be doing next year, I'm wondering how much money that's going to cost you and where the money is going to come from. So you've got a little over $1.6 million that you got from the exercise of those warrants. How far is that going to take you, and how much is the next program going to cost you that you're planning?
So the 1.6 million would cover most, if not all, of the 4,000 to 5,000 meters. That's approximately the budget. But we in total now we have well over 4 million, about 4.5 million in the treasury. A little bit of that is in stock in some of the partner companies. But one thing I will note is we do have upwards of 10 million potentially coming in cash and stock over the coming years from the various option partner payments. So again, assuming that they make good and complete their full earnings, that's more than enough to cover, obviously all the G&A acquisitions. We're continuously acquiring new projects and claims, and that would cover, likely all, if not the lion's share of all of our exploration that we have planned or will be planning over the coming years.
How much of that do you think is reasonable to expect to come in? Like, are you, I guess you're hoping for all of it, but do you think it's reasonable to expect all of it to come in?
It depends on the market, really, right? I mean, it's an interesting part of the business where, we see this, over the last few years as we've signed more option agreements. As the market picks up, you can safely expect that more of that's going to come in. But, when the market's softer, less of it comes in, right? So, it's very much, I'd say, contingent on the market. If we continue to see this more recent trend that we've seen over the last few weeks, I'd expect, a good chunk of it does come in, and we do see also not just the cash and stock come in, but also, and quite frankly, I think more importantly, the money gets spent in the ground, the exploration expenditure requirements met by these various earn and option partners. I mean, that's a big part of the prospect generator business. It's nice to have some cash and stock come in on an annual basis, but really what is the most rewarding for shareholders is the prospect of new discoveries being made by these partner companies. Even though we would only end up owning maybe a minority interest in the project, maybe a royalty and equity in the company, these discoveries can be very, very valuable, as I mean, high grade uranium discoveries in the Athabasca are some of the richest mineral deposits and highest value discoveries that you can make anywhere in any mineral exploration globally. So having even a minority stake in one of those with a partner company is probably worth some multiple of our current valuation. And so that's what's most exciting for us, really, is with a good market, companies being able to raise money and ultimately spend that money in the field drilling and increasing our chances of being a part of a new discovery.
Do you also expect to see any more warrants come in over the short run?
We don't have the warrants that came in recently. It was one warrant holder that exercised, and we don't have any more. They're at 22 cents, so those were the last of the 22-cent warrants. Most of the remaining warrants are priced higher. So again, just depending on where the market is, we may see some come in, but also most of them are also have a couple years of life left on them, so they're not expiring in the next few years. I think there is a small batch expiring at the end of this year, but the majority of there's 170 million shares out, fully diluted about 192 million. I believe there's about 9 to 10 million options. Again, most of those are priced a bit higher. And then the remainder being the warrants. So we don't really have many more dilutives out there. And that's, I think, worth noting as well, given the market and warrants are great when they come in, but they can be a bit of an overhang. And so we've fortunately chewed through pretty much all of the cheaper warrants now at 22 cents. And so that there's less of that warrant overhang going forward.
But so you're basically well funded for this year, and then hopefully to finish that 4 to 5,000 meter drilling program next year. But it's well, I mean, there's a saying that you take money in this space, you take money when it's there. So I guess if the uranium market was to start moving here, would you be looking for financing, or would you try and stay away from that as much as possible?
I mean, look, we don't need to raise money, but as you just pointed out, if the market's moving significantly, and if we want to ramp up our current budgets and programs, that's something we could look at. But it's going to be, again, very much contingent on the market, and we certainly don't need to go back to market right now.
Okay, understood. So I want to go back to you picking up more land, because you staked some ground, which is also an interesting move, as you said, brought you up to over 500,000 hectares. That's 1.2 plus million acres. But you already had quite a lot of ground before that. You were above 1 million acres, I believe. I think, not sure, but you were around it. And so, what's the reasoning behind picking up more ground instead of focusing on drilling here?
Well, one, it's relatively inexpensive to acquire new property if you're able to. Now, it's a very competitive online staking process, but we've got the team to do it, and so there were a few claims in areas that we were keen to pick ground up in, so we did that, and hence the news release. The other part of it is we want to continue to add to our inventory of properties to fuel this prospect generator business. I think we probably did touch on in the last interview, we continuously acquired ground through staking. Again, it's relatively inexpensive to do so, but we also did a deal earlier this year, closed on it just a few months ago with Denison, bringing in 100% of the South Dufferin project, a more advanced stage exploration asset. And we are actively looking to find partners on that company, as we are with this recent staking and the new claims that we brought in. And so, again, as the market heats up, we've seen this the last several years around this time of year, usually because it's seasonally a stronger period. We get a lot of inbounds, companies and groups that are looking to acquire projects in the Athabasca Basin, and we can offer that, right, with a strong inventory of projects that we own 100% of, unencumbered, and we can go out there and strike deals that involve them coming in, optioning the projects, and adding, building out our prospect generator business.
So this didn't happen, like you picking up ground didn't happen on a whim. You said you were keen to pick up ground in that region before that. Why is that? Is it geologically significant in any way, or something else that you have in mind?
Yeah, the most recent staking that we did, most of it was to add on to existing projects that we had, and some of it too is claims lapse, right? Companies don't spend the money. I think that's an important point that to highlight is the requirements in Saskatchewan. You have to actually spend money in the field. It's nice not having to pay a government organization on an annual basis, but you do have to spend money advancing, exploring, and developing the projects. And it's $15 per hectare. So you do get situations where, if companies do not spend that, the claims lapse, and there's an opportunity to pick up claims that are geologically prospective, which is what we just did. And our geological team, they've been active up in the Athabasca for decades. Dave Bayard, our head geologist, was ex-Cameco, built and sold a company called J&R. It's made multiple discoveries and has been with us really since day one. Christine McKechnie, also ex-Cameco, wrote an award-winning thesis at the University of Saskatchewan on one of our deposits, the Fraser Lake Zone B deposit. Spent her entire career looking for uranium in the Athabasca Basin. So, we feel like we do have, a competitive edge or advantage when we're acquiring new projects. But that being said, it's gotten a lot difficult, Antonio, to actually go out there and build these project portfolios. In fact, I'd say now it's near impossible to go out there and stake ground and build a legitimate uranium exploration co. You're having to do deals with companies to acquire projects, and again, that feeds into our prospect generator business, because we were there acquiring ground. over the last, call it decade, building up this portfolio. And so as the uranium market heats up and new money comes into the sector and new companies are looking to build portfolios, we can offer those projects to these newcomers.
But you're staying firm on the model of they spend money and pay options payments, maybe. You're not necessarily looking to do an outright sale or something like that if a new company came in.
We would entertain it. We'd lean towards continuing to do option agreements whereby we keep a minority interest in the project so that we do have exposure to new discoveries, right? We have structured a few deals where we would there's an earn-in maybe for 70 to 80%. And then there's an option that the company has to buy out 100% of the project for a fairly significant amount of cash in stock. Actually, similar to what we structured, the deal that we structured with Rio at Russell, which allows us to buy 100%, but there's a balloon payment at the end of the day. So you do in that event, right? It makes sense because if the company makes a major discovery, and they buy you out of the project, you end up owning a lot of stock of the company.
Mm-hmm. Sure. Well, you have something comparable going on with Azincourt, who released some results from their East Preston project, where again you own a minority interest in that project. But as far as I understand, there was nothing significant in there, and so you've also decided not to participate in their 2023 exploration program, which I think that reduces your participation down to 9%, 9.5%, I believe, from 15. That's right, from 15% to 9.5%. What's happening? What's happening there? Why are you not going with them?
So we have participated in most of the programs, right? We were a 15% holder in the project, and we've maintained just under 10%, and we're very, very bullish on that project in the long run. We think they've done an excellent job exploring it, advancing it. Keep in mind, this is a project that we had acquired years and years ago. Very little historical drilling and exploration. The discovery process takes time, right? It's not usually an overnight thing, and so they've done some excellent work in drilling to basically define and vector in on zones of mineralization, albeit anomalous or lower grade. They are finding zones of mineralization, though, and given the stage the project's at, I think that's quite significant. They're seeing all the right indicators too, including dravite and other clay indicator minerals. So I think they're on the pathway to a new discovery, and you'll see with the news, we actually ended up issuing shares and paying some cash to maintain that, call it just under 10% interest. We raised flow through a year and a bit ago, and there's the new critical metal tax credit. We had to spend that flow through at Russell and Moore Lake, right? We could not spend the flow through it at other projects. So look, Azincourt's done a great job advancing it, and I expect that we'll see them continue to do so in the coming years.
Where do you see the most value for shareholders? Because you say you have to spend your flow through there, and I understand it because it's flow through. But is that also where you see the most value for shareholders being discovered at your Russell Lake and Moore?
Yeah, I mean, look, Russell Lake and Moore Lake are the flagship projects for a reason. They're the most advanced stage exploration projects that we have in the portfolio. Falcon Point, which has now been optioned out to a couple of different companies, and South Dufferin are, they're drill ready. They've been drilled. There's mineralization at those projects. Falcon Point does host a small uranium deposit, but Russell and Moore Lake, kind of check all of the boxes we need to see. We want to spend money on more advanced stage exploration projects and vend out or option out some of the earlier stage projects. Not that those earlier stage projects aren't prospective for discoveries, but they're just at an earlier stage, right? There's work that needs to go into getting the project to the point where the next drill hole could be that major, big high grade intercept. And at Russell and Moore, at Moore Lake, we have high grade intercepts like that, right? So it's now at a resource delineation stage. Whereas at Russell, look, every drill hole that we're drilling, we, needless to say, believe there's the potential that we could intercept something major. It's got all the right geological indicators, and there's some historical high grade. But it's still an exploration property. It's it's a project that was drilled extensively over, call it 25, 30 years, but extensively meaning over a wide area. And that was one of the, we talked about this in the last interview, but that was one of the exciting parts of the acquisition for us, was getting our hands on a project that had been drilled. There's lots of data, but not tightly spaced drilling. And really, to make discoveries in the Athabasca Basin, you do have to vector in on mineralized zones, and then keep your drill spacing relatively tight. And Russell is, as we talked about extensively again in the previous interview, we view this project. It's a co-flagship. It's ripe for discovery, and we think we're the right operator to do that.
Fair answer. I'm basically what I was thinking about is more of seeing what you've seen this year and having gone through the market that we've gone, which has been a challenging market. I was thinking what business model you see more value in. Like, basically, if you had to get into your head, you only had to pick one, one side of the business, the exploration or the prospect generator, which side would you pick?
Both, right? I mean, there's a reason we do both.
Sure.
I don't know if that's the answer you're looking for, and I think we have shareholders that would prefer one or the other, but look, we're a hybrid model, and it's worked for us. It is working for us. It allows us, again, it's simple, right? Exploration, as you pointed out, is a very high risk business, right? You cannot guarantee discoveries. You cannot guarantee good drill results. It's very difficult to make new high-grade discoveries in the Athabasca Basin. There's a reason, these discoveries can be multi-billion-dollar discoveries. They're rare. Now, we do have new, techniques and exploration methodologies at our disposal to help hone in on these deposits. You look at recent discoveries, in particular, those made by NextGen and Fission and ISO, and these are discoveries. I mean, it just shows you how far the exploration techniques and methodology have come since 30, 40 years ago, where you're basically just drilling geophysical targets and hoping for the best. But nonetheless, it's risky. So the hybrid model, right, allows us to focus in on what we believe are our best prospects in that they're the most advanced stage, meaning we don't have to spend all this money defining targets. We feel like we can go in, we can drill a hole and have a good chance, or have a chance of making a new discovery. But we want to also have multiple irons in the fire. And that's what the prospect generator business allows us to do, as well as some of the other benefits. So, look, would we split the business up? I don't know, but I'd say this: for the time being, in the near term, you will continue to see us do both.
I understand. It's it is selling forward upside in a sense, but it is also buying downside protection in a sense. So yeah, it makes sense.
And look, if we, I think, people like to kind of think of it. Some people like to think of it as, one or the other, right? And they have to be mutually exclusive. That's not really the case, right? I mean, look, we are drilling and working at our flagship projects of Russell and Moore. So we offer investors full exposure to those projects, no different than any other, call it, one or two project focused explorcos in the basin that are just working on one project. We just also happen to have a big portfolio of properties that we built over the course of the last decade that has allowed us to build out this prospect generator business. I do sometimes say, the prospect generator business is secondary to us being a pure play exploration co. And I think that's a fair statement still to this day. But the prospect generator business has grown quite significantly for us over the course of the last several years. And, again, I'd rather have drilling ongoing at several projects, especially we're not having to pay for it if it's partner funded. And we can focus in on our main assets, right, at Russell and Moore. You never know. One of the partner hits, or best case scenario, obviously we hit at one of our main projects. But you maybe one of the partners has makes a major discovery. That's big news for us.
What I'm thinking about it, and I'm sort of thinking out loud here, is how the market is looking at that and how the market is valuing it. And I don't want to go into a rant, but what's interesting to me is when I look at where your stock prices, for example, versus where it was last time in 2022 when the uranium spot price hit the same level that it just hit right now, about $63. Your stock price was almost double what it is today. And you're not an exception. Many of your peers are trading at that. Some of them are trading at like, four times. They were four times higher than they are right now. And sure, it's exploration. Part of it is dilution with some of these companies they have to account for. But and maybe you can talk to me about that actually, because you've been going to conferences, you've been out there talking to people. So is anyone giving you any insights as to what's going on here and why are the stocks much lower than they were last time when the uranium price was where it is today?
Yeah, look, it's a good question. I think we did touch on this when in our last interview. The disconnect really is in the equities with with the rising uranium price. Now that is starting to close, right? We are starting to see that close and narrow here. Commenting on a year and a half ago when we saw the price in the, call it, low to mid 60s, right? And obviously the equities, most equities, especially the juniors in particular, were trading much higher, right? I think the market really just got ahead of itself. I've said that before. I think there was this kind of euphoric, squeeze in the market that happened, and money kind of flooded in, and we saw it exit pretty quickly shortly thereafter, right? And so we've seen this consolidation, and we've also now seen the larger caps like the Camecos, next gens of the world march higher. They've traded very well. They're most of them now hitting 52-week highs. And we're starting to see the natural flow of that down into the larger, to the mid caps, to the smaller caps, right? And I think it's important to remember that junior companies, I know they should provide more leverage and more torque in a rising market, but they typically, in the mining space, you're well aware of this, they're usually late cycle performers, right? So you see this towards the latter part of the bull market. So it's not unusual to see them lag in the early days. And keep in mind, we are still, I believe, very much in the early days of this bull market. So I think there's great value in the juniors. I think there's a lot of catching up still to do, especially as uranium price is moving higher. But I think the market got ahead of itself a little bit, certainly with the share prices, and back in early, call it late 2021, early 2022. I think this next leg up is going to be the real leg up. This is going to be driven by the fundamentals. This is going to be driven by all the the positive bullish tailwinds that we've talked about in the past. And maybe it's a good segue to talk a little bit about the WNA, which I just got back from. And the WNA, as you and I'm sure your audience is now aware of, is the marquee nuclear conference annually in London. I've been going to it since 2017, and it was a very upbeat conference this year. Needless to say, I think that the attendance, it's usually only 400 to 500 people. At least that was the case last year. And this year we saw, I believe it was closer to 700 to 800 attendees, and you got lots of people in town around it. But you really do get the full picture of the industry, the full spectrum, from the mining companies, the fuel sellers, right through the whole fuel cycle, enrichers, converters, right through to the utility companies, plant operators, government agencies, regulators, you name it, right? So it's a great conference, very educational. And one of the key takeaways from the conference was that the market now has shifted from a fuel buyers market to a fuel sellers market. The mining companies, the producers, are now the ones that have the leverage and are I wouldn't say the fuel buyers are price takers yet, but we're moving into that into that kind of a scenario where it's been a very challenging market for the producers and the suppliers over the last decade. That's reversed, and we are now seeing a situation play out where the market at all stages of the fuel cycle, not just uranium or U3O8, but enrichment, conversion as well. All stages of the fuel cycle have tightened up, and it feels like we're at this inflection point akin to what we saw in the mid 2000s, before Cigar Lake flooded and there was a supply shock. It really does feel like this market is just getting going, and again, there's this fragility on the supply side, and that was talked about where we're seeing these relatively minor supply disruptions, certainly compared to what we saw in 06, 07. Cameco announcing a couple million pounds that at both Cigar, collectively at Cigar and McArthur, that they've missed guidance on, and nothing obviously like the flood that we saw in 06, 07, but it does show you how fragile the supply side is. These kind of marginal incremental supply disruptions, do make a difference. Niger, the military coup in Niger. I mean, Niger is 5% of global production. They provide a lot of uranium and a lot of fuel for Western Europe, in particular France, historically. And so, this could have a significant impact on the market. And the market is, as we've talked about, I won't belabor this, but the market's bifurcating east and west. And you've got, Kazakhstan, you've got Russia, Uzbekistan, parts of Africa like Niger, that represent Eastern production, call it, and a lot of that production and supply will remain in the East, in China, in India, and Russia, and in other parts of the developing world. Whereas in the West, Canada, the US, Western Europe, call it Japan, South Korea, where we simply aren't producing enough uranium in the West to meet growing demand, and in particular, just to meet Western demand. Western demand is still much larger than Eastern demand annually, and we produce a lot less uranium. And that was emphasized at the conference, was this urgency to bring new production online, to bring new primary supply online. And so, yeah, it was an upbeat conference. It was for the first time since I've been going. There was a notable increase. It wasn't a ton, but a notable increase in the number of fund managers, institutional fund managers, buy-side people that were at the conference that weren't necessarily a uranium-centric or mining-centric fund, but a generalist fund, a global macro hedge fund, for example, or family offices that are sector agnostic. And they had people there that clearly been doing due diligence on the space. They bought into the trade or the thesis. They see the opportunity. One of the issues that is clear is with these larger funds and these bigger pools of capital are liquidity constraints. There just simply aren't that many companies available for them to invest in. Cameco, some of the larger developers, Sprott Physical Uranium Trust, these companies, these entities trade enough volume, dollar volume on a daily basis for these larger funds to take positions in. But outside of that, there really aren't that many larger companies in the sector that offer exposure. And what's interesting, though, with that point is that as the space continues to grow and as money continues to come in and the market moves higher, that there's a lot of money and big money on the sidelines that can still come into the space as these companies grow in valuation. And then typically as a result of that, the liquidity picks up, the daily liquidity picks up. So yeah, it was an exciting conference, and it's as I said, a very, very exciting time for the industry, for the uranium mining industry. I still think even at $62, $63 a pound, there's still a lot of runway, and I think this next leg up will be real. This will be a significant move higher on the back of your rising uranium prices. And again, the juniors, as we just discussed, do have some catching up to do. There is value there in the juniors.
I do hope you're right in this one. I am wondering though, what did you go to the WNA conference? Because you're not necessarily marketing the company, like on stage, like there's no presentations or anything like that. You don't have any production to commit or anything like that. So how come does it make sense for you to go there?
No, that look, there's, as I said, there's investors out there. You have meetings, right? You do it for educational purposes. I've gone out since 2017. It's a great way for me to educate myself on what's happening in the industry, get a sense of what's going on. Yes, we're not producing, but we are a part of the industry, right? We're out there finding the next deposits. And again, I'll emphasize this point that we need more production from the West, right? So that, we need to find more deposits. We need to delineate larger deposits and de-risk these assets and ultimately provide a pipeline of projects for the West to get its uranium, get its nuclear fuel. And so that we're very much a part of that.
Okay, so what do you generally do when you go there? Are you having meetings? Is that like who are you meeting? What are you discussing?
Yeah, we meet with investors, right? We'll sit down also with other industry participants at various other parts of the fuel cycle. Again, more from an educational standpoint. There's lunches, there's dinners at various brokerage houses and firms host, right? So there's a networking component. It's not a traditional resource investor conference, but we do lots of those. So this is actually, I find, to be one of the more valuable conferences to go to, because you do keep in mind, the investors at this conference that do come and do attend or are there, around the event, they're investing specifically in this industry, right? When you go to a PDAC or you go to various other kind of well-known mining conferences, there's lots of investors are great, but there's also lots of other mining companies there that do lots of other things, right? And they're in other commodities. So this is, I to be honest, it's one of the better conferences that I attend annually.
Interesting. That's a very interesting way to look at it. It's a different approach, I suppose, to conferences and marketing that is maybe also not as available in other industries. Like you have gold shows and so on and so forth, but they're just not like that. That's a good point. Yeah. Well, I think I've gone through most of the questions that I wanted to get an update on and the topics. Is there something that that you came here hoping to talk about, but I'm failing to bring up?
No, look, I think we've covered a lot. We can talk more about the macro, the tailwinds that we've just kind of slightly covered here and in future interviews. And like I said, we'll have lots of news flow and catalysts over the coming months. This is usually coming out of the summer drilling seasons and exploration seasons. You get a lot pick up in the news September through November, and then plans for the winter programs. And like I said, we've got plenty of news flow on the horizon with our own projects, Russell and Moore, as well as at partner funded projects.
Well, I'm looking forward to staying up to date and speaking to you in other conversations, Jordan. So thank you so much for investing your time in me.
Thanks a lot. We're looking forward to catching up in the next several months here.